let's talk about S Corp payroll because it confuses so many people. When you become an S Corp, you are required as a business owner to put yourself on payroll and pay yourself a reasonable W-2 wage. Now, one thing that people often get confused about is if they can still take distributions, and the answer is yes. And actually, you want to still have money left over for distributions because that's the benefit of the S Corp. You will pay Social Security and Medicare on your W-2 wages, but then you don't have to pay self-employment tax on distributions. So right now we're looking at a monthly payroll for an S Corp owner with a salary of $7,500 per month. So let's take a look now what the payroll looks like. So because this is an employee, we have gross wages, we have federal withholding, Social Security, Medicare, and this person is in Oklahoma, so we have Oklahoma state income tax. But in addition, there are also employer taxes that the employer pays. So again, Social Security and Medicare, so half paid by employee, half paid by employer. Then we have FUTA, which stands for Federal Unemployment Tax. The A doesn't actually stand. Federal Unemployment Tax is what it is. I don't know why it's set as FUTA. Federal Unemployment Tax Agency is what it stands for, but we're actually looking at the Federal Unemployment Tax. And on this one, it's $42. That is the maximum per year. So once you've reached $7,000 in taxable wages, you will not incur an additional federal unemployment tax liability unless you're in a state that has a FUTA credit reduction at the end of the year, but we won't know that till November. So for simplicity, let's just say that this specific tax is going to cap out at $42. And then Oklahoma unemployment is here. This would be whatever state the employee S Corp owner is in. But just like federal unemployment, each state does have a cap on the taxable wages. In Oklahoma, the cap is over $20,000, so you will see that tax. But depending on your annual wage, you may see that state unemployment tax drop off at some point in the year as well. For Social Security, there is a taxable wage base, and for 2023, that is $160,200. So just keep in mind that when you are an S Corp owner and you're processing payroll, your payroll expense, just as if you had a regular employee, is going to be your gross pay plus your employer taxes. So a lot of times business owners are confused, especially when looking at reports and they see several different tax line items. This is what's coming out of your check as an employee, and this is the liability that you owe as an employer. But as an S Corp owner, you are both the employee and the employer. But again, the benefit is that your distributions are not subject to that self-employment tax. So you are saving money there. So you're paying additional for federal and state unemployment, but on the backside, you are not paying self-employment tax on anything above and beyond your W-2 wage. Now, your W-2 wage should be a reasonable wage. Unfortunately, there's no specific formula of what that means. So it's not a mathematical equation of net, percent of net or anything like that. But if you work with a CPA or an accountant, they should be able to review your business information and help you to come up with what may be deemed a reasonable wage for you. One thing you don't want to do is do a super low wage, like $2,000 a year. That really opens up your potential for audit. And if the IRS audits you, they can come in and reclass some distributions or all distributions as W-2 wages. And I can almost assure you that what they deem to be reasonable will be much more than what you might have put in there had you done it honestly in the first place. So definitely encourage you to really come up with a reasonable wage that you could defend in the event of an audit. So again, with the S Corp payroll, people are often surprised by the employer tax liabilities. That is going to be Social Security, which is 6.2% up to the wage base of $160,200 for this year. Medicare, which is 1.45%, federal unemployment, which is 0.6% of the first $7,000 paid, caps at $42. And then state unemployment, but the state unemployment tax rate and wage base vary by state. So that will be different for each business and state. As always, if you have questions, please don't hesitate to reach out. We work very closely and very well with S Corp owners getting their payroll up and going, and also are happy to assist them in making changes throughout the year. As your business changes, grows, you need to skip payroll or increase wages or change taxes, no problem at all. We're here to help and get those changes in the system for you so that you can focus on your business. You can find us online at validpayrollsolutions.com.